Here's something nobody tells you about great powers. They don't get toppled. People just stop needing them. The transfer of power from one nation to another rarely begins with a bang. It starts with a whisper, hidden in plain sight. The first clues aren't found on battlefields. They are buried in boring-looking trade ledgers, in central bank reserve statements, and in the quiet consensus of who the world trusts with its savings. This is the story of how power really fades, not in a blaze of glory, but as a slow, silent rerouting of the world's plumbing. Why should you care about these quiet numbers? Because they touch everything. The price of your coffee, the security of your job, the stability of your savings. They all ride on the invisible currents of exchange rates, trade flows, and capital. Your career prospects are shaped by where the world's next great factories are built and where its most innovative labs are funded. And that deep-seated feeling of safety, the one that comes from knowing your passport or your bank account is a stable asset in a crisis, that too is a reflection of these slow-moving ledgers. Understanding this pattern is like seeing the world in a higher resolution. So what actually starts the slide? The cycle almost always begins with success. A nation becomes so dominant that it provides security for global trade. It maintains a vast network of bases, alliances, and promises. But this reach has a high carry cost. The bill for ships, soldiers, and security guarantees grows every single year, often faster than the economy that supports it. At some point, the budget begins to groan under the weight. Interest payments on past debts start to crowd out spending on the future, on new schools, on scientific research, on infrastructure. Choices become harder. Every decision becomes a trade-off, and the world is watching. But here is the most counterintuitive part of the cycle. At the very same time, the dominant power enjoys what experts call an exorbitant privilege. The whole world wants to hold its currency and its government bonds because they are seen as the safest assets on Earth. This massive demand keeps the currency strong, which feels like a sign of strength. It allows the nation to run huge deficits, buying more from the world than it sells. It feels great, like a permanent subsidy. But it's a trap. A permanently strong currency makes your own exports more expensive for everyone else and makes imports incredibly cheap for you. Over decades, this quietly erodes your own manufacturing base. Factories close, skills are lost, and supply chains move abroad. You are, in effect, subsidizing the industrial rise of your rivals by sending them your currency in exchange for their goods. You wake up one day with world-class financial markets, but fewer world-class workshops. Look at the British Empire. Its decline was written in the ledgers long before the flags came down. After the immense costs of the Napoleonic Wars, British public debt peaked near 260% of its economy. After World War II, it was nearly 250% again. These weren't just numbers, they were constraints. Then came the big flip. For a century, Britain was the world's banker. But the cost of 2 world wars was so high that by 1919, it owed the United States around £1 billion. The world's primary creditor had become a debtor. Between the late 1920s and the 1940s, the US dollar steadily overtook the pound sterling as the currency of choice for trade and reserves. By the 1950s, the handover was complete on paper. But the psychological moment of truth came in 1956. When Britain and France moved to seize the Suez Canal, they assumed their military prestige still called the shots. But tanks weren't the deciding factor. Dollars were. The United States disapproved of the invasion and applied quiet financial pressure. Washington signaled that emergency dollar loans through the International Monetary Fund would not be forthcoming. Facing a run on the pound and a balance of payments crisis, London had no choice but to withdraw. No shots were fired between the Allies. It was just the quiet, brutal realization that access to financial liquidity from Washington had become more powerful than the Royal Navy. And this pattern is even older. Before London, before New York, there was Amsterdam. In the 17th century, the Dutch didn't just have ships, they invented the operating system for modern global capitalism. The Amsterdam Wisselbank, founded in 1609, functioned as the world's first reliable central bank. They pioneered joint stock companies, allowing ordinary citizens to invest in risky global voyages. Their financial innovation was an unbeatable edge. But by the late 1700s, the story repeated. The Dutch Republic's public debt soared to over 200% of its economy. Debt service consumed the budget, squeezing out naval spending. Meanwhile, Britain was harnessing the power of coal and scaling its industries, financed by London's deeper and more dynamic capital markets. The financial center of gravity shifted before the maps were redrawn. So what do the ledgers say today? The US dollar is still dominant, but there is a clear, slow drift. The dollar's share of global central bank reserves has slipped from over 70% in 1999 to around 58% in 2023. At the same time, the U.S. has become the world's largest net debtor. Its net international investment position, what it owes the world versus what the world owes it, is negative by about $18 trillion. And at home, public debt is now roughly the size of the entire economy. Projections show that if trends continue, annual interest payments on that debt are on track to exceed the entire defense budget within the decade. These aren't signs of imminent collapse. They are warning lights of shrinking flexibility. Now look at the other side of the ledger, the real economy of factories, labs, and trade routes. China became the world's largest exporter of goods back in 2009. By 2022, it accounted for about 14% of all global merchandise exports. More importantly, in 2021, China's share of global manufacturing value added was around 31%, compared to about 16% for the United States. This shows where industrial capacity, supply chains, and engineering know-how are concentrating. In the race for future innovation, the spending gap is also narrowing. The U.S. still leads in absolute research and development spending at over $700 billion a year, but China is now over $500 billion and growing faster. The real economy is where future power is forged. While the dollar's plumbing is still central for now, handling nearly half of all global payments, you can see small workarounds emerging at the edges. After sanctions were imposed in 2022, for instance, a large majority of trade between Russia and China quickly shifted to settlement in their own currencies, the ruble and the yuan. This didn't dismantle the dollar system overnight, but it was a proof of concept. It showed that when rivals have a strong incentive and a viable alternative exists, they can and will create smaller, parallel systems that route around the main hub. Every new route reduces dependence on the center. So if you want to understand the true trajectory of global power, ignore the noisy headlines for a moment and watch 4 quiet dials. 1. The balance of trade. This shows you who is building and selling versus who is consuming and borrowing. 2. Manufacturing capacity. This tells you who can physically make the essential goods in a crisis. 3. Central bank reserve shares. This is the world's collective bet on which currency will be a safe haven in a storm. And 4. National debt and interest costs. This reveals a nation's financial flexibility and how much of its future is already spoken for by its past. When these four dials move in the same direction for long enough, the story is already being written. Here is the reframe to take with you. Great powers don't really fall. They get outgrown. Their systems, their currency, and their security guarantees provide a stable environment in which others can rise. The handover of influence is arithmetic before its history. It's a slow, multi-decade transfer of industrial capacity and financial claims, which only becomes obvious in a crisis. Of course, this decline is not destiny. The United States still has immense advantages in technology, innovation, and global alliances. But the numbers tell a story of a world that is steadily rebalancing. They invite us to see history not as a series of dramatic battles, but as the quiet, relentless compounding of economic reality. If this idea helps you see the world a little more clearly, subscribe to Knowledge Worth Sharing for more mental models that matter. Thanks for watching.